From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming July 2nd Forex session. Pair in front of you is one that many of you probably don't pay much attention to, and that is the Swiss yen. And the reason I believe this is the case is because for so long they've traditionally been safe haven currencies. Well, with the Swiss National Bank and its actions lately, the franc really isn't a safe haven currency, and I can assure you that the Swiss are not overly concerned about the appreciation of the franc against the yen. It's a very small market. It's the exchange of trade between the two real economies, not the forex markets, is very minor. So, having said that, it's not nearly as important as, say, the Euro Swiss. So, we don't really have the constraints that the Swiss National Bank has on those other pairs. So, it's a little bit more free to move. Looking at this pair, I find it at a very interesting spot because, and I don't have this on the chart, but this is the 50 EMA, and it is one of the moving averages that traders will pay attention to, who are trend traders and the like. The other two big ones are the 100 and the 200, but the 50 is one that's followed from time to time. And you can see that I have the 84 and the 85 drawn out. Now, why do I have this drawn out? Well, I see this as one big resistance area. And then, on top of that, we have the 50% Fibonacci retrace from this fall. You can see over here, previously we had a lot of noise, and that lines up with the 84, 85. So now we have a situation where we've got resistance, we've got the 50, and we've got the 50-day moving average. Now, granted, the Friday action was pretty impressive, and the yen sell-off in general, not just in this market, as the EU came out with the announcements. Everybody was happy. Happy days were here again, and we just took off. Of course, my suspicion is there's quite a bit of short covering in that as well. And until I'm proven wrong, I have to think that that's the way it is. It was just kind of a sudden knee-jerk reaction. A little light on the details with the announcement, so it can't be based upon something that people have seen that they like. Of course, I could be wrong, but looking at the charts, we can see that this is an area where we could see some type of reversal. So I'm watching this pair for some type of reversal candle, maybe a shooting star or a very weak one or something. We'll see what happens. But in this area here, I believe 84 and 85 on a solid sign of weakness, especially a daily shooting star would be the ideal trade. I would be looking to sell down to 82. If we get a daily close above 85, then at that point in time, I have to acknowledge the fact that the pair is starting to change its trend, and then I'd be long and be willing to ride this one out. Now, the beauty of the Swiss franc Japanese yen pair is that it tends to grind. You see a couple crazy days here and there, and that's probably more indicative of the markets on the whole. But as you can see, normally it's a fairly slow moving pair. It's a nice steady movement, and it's a very technical pair as well. So having said that, it is one of my favorite longer term trend pairs to trade. So there we have it. Above 85 is a long on a daily close, and if we get some type of weak candle between 84 and 85, I think we could see a return to 82. It's a nice binary trade the way I like them, and we'll just simply wait for the end of the Monday session to see what the market tells us to do.